Alright, what is up traders? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. Today we got a lot to talk about on Bitcoin. We have seen a pretty momentous couple of weeks. We're going to get into that. We're going to explain why we think it fell last week or yesterday and what we're potentially looking for next week. That sounds good to you? Make sure you stick around until the end. Alright, so here we got Bitcoin on the daily time frame. This is the spot market on the Coinbase data feed. And you can see there that after last week, we had a little bit of sideways at the beginning of the week. Yesterday, we had a big momentous move based on the Fed. I do believe that that move was brought down, or price action was brought down, from this comment specifically in the speech when he said July's increase in the target range was the second 75 basis point increase in as many meetings. I said then that another unusually large increase could be appropriate at our next meeting. He went on to say that we are halfway through the intermeeting period, and then, our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. But this first part of the comment is probably that the price action started to take a downfall. All right, so going back over here, yesterday we were doing this live. We were trading this. We did trade the first newsprint, and then we were looking for a potential sell entry when the meeting come out. The problem is the level that I was looking to sell, $21,925 in yesterday's live stream. This same level, we were waiting for price to get up there, as I wanted to see a liquidation of the current range highs to then put in a sell order, putting a stop above that wick. But you can see here that Bitcoin stalled out just ahead of that level, not giving me a sell entry. We did come into monthly support last night while I was in bed, and I did tell the members of the community that if you wanted to take a trade, that there was a pretty good chance that on the approach of monthly support, you could set a long order there and only trade it for a bounce. So you're just looking for, when that price level gets hit, a very small bounce in price. It's a very high probable trade. That trade did work out, as you can see, with price just squeaking under it just a little bit. And to be honest with you, if I move this down here and go to the actual level that we were watching this point right there, which was daily supply, or daily demand. And you can see that if you had your limit buy setting at daily demand, you would have been able to trade that, up to $20,159. Just about a $200 move there. So nothing special, but those are those high probable trade entries that I discussed. Now, I'm not looking for further upside continuation from here, although it is possible. We have the monthly close of August coming in on Wednesday of next week. So depending on where this thing is trading on Wednesday at the close will determine what we look for further downside. If we close under monthly support Wednesday, then September's going to come in hot, meaning we're already going to have broken down and closed below support. And in history, probabilities show us that Septembers are usually bad times for Bitcoin. All right, so here we are, the BLX monthly chart. This is the entire history on Bitcoin as an asset. You can see here that 3 out of 12 Septembers closed bearish. So the probabilities are that, that's likely you're going to see weak prices in September. Now, out of all the 12 Septembers that we've had since Bitcoin's inception, only these 3 with the lighter area or the lighter color shaded lines were Septembers that closed bullish. So at the close, will next month be red or green? It's anybody's guess, but with probabilities on the side of we're probably looking for more bearish continuation. We can look at the cycle model chart, the 4-year cycle model chart, and see that, there probably is a little bit more downside to go. All right, so here we have the BLX cycle model chart. Basically, what this shows you is every time you've gotten to having in Bitcoin's history, you've seen a massive bullish rally with a sustained period of a bear market after. And in most or both cases that we've had these bear market and bull market cycle, you can see that each bear market lasted approximately 14 bars, in this case 14 months, so a little bit over a year. The previous bear market that we had only lasted for 1 year, from cycle model top to cycle model bottom. Another thing of importance that you should see here is both cycles had over 80% corrections to the downside. So if Bitcoin's going to continue on the same path that it has in its entire history, this does not not mean it will. This does not mean I think it will. I am simply saying that if it does, then we know that we have at least another 3 months of potential downside. So whereas I think the lows are in if inflation has topped out, because that's the one thing Bitcoin has never seen. We already know all that. You know what I mean? It's a meme at this point to say Bitcoin's never experienced inflation, so the 4-year cycle model won't work. If you're looking at probabilities, then there is a likelihood that you see another couple months of downside. And if that does remain the fact, with September coming in hot, if we close below support, then the low probably ain't in. Where could we look for those lows? In my opinion, the best place to look for those lows is going to be right there at $13,863. The reason why we're going to be watching this level is because this is quarterly, monthly, and yearly support. There's your yearly time frame. That was your yearly close in January 2017. You closed up there. That was resistance when you came back in and tested it 2019. We had a tag of that level and a pullback. And then 2020's bull market rally happened after we had the March 2020 pandemic. You did get that bull market rally thanks to the Fed. You did break out above that resistance level without ever coming back and retesting it on at least a weekly time frame. You did test it on a daily. All right, so here's one more thing I want to talk about: risk, because of that meeting yesterday. So basically, there was an article that was going around on Twitter there for a while back a few weeks ago, talking about how since the S&P 500 or the SPX broke out above its 50% retracement after having a 20% plus decline, because 20% is how you identify a bear market, and supposedly since 1945 or something like that, the S&P 500 has never done this and not made new lows. In other words, what the article was saying is, if you break out above the 50% retracement, then there has never been any time in history since 1945 that prices went on to make fresh yearly lows or fresh bear market lows. What we were talking about a few weeks ago, if you remember, I said the way that we were going to identify this as a potential trap and look for downside moves to the downside, or look to short the downside. If you do think that you're going to see new bear market lows, the best way to trade this would be to wait for the trap to reveal itself. And we currently have that. Now, typically, I like for traps to play out immediately. Meaning when you do get the breakout above, if that is going to be a bull trap, I typically want to see the bear candle, the next week's bearish range, take out that candle's low to identify a near-term top or a local top or a bull trap, if you will. All of those three things are essentially the same thing. Just depends on which YouTuber you're listening to when they describe it. But essentially, that's what we're looking for. Now, since we have taken out this bullish candle's low, we can now indeed look for short entries if we do get a retrace back up to or around, let's say, roughly 41.91. Now, that's 2 weeks worth of range. So basically what we're going to watch on the S&P 500 to be a little bit more accurate is we are going to watch 41.55 spot 93, and if this is going to have downside continuation, I think this is probably where you would want to look for that short entry. Obviously, it might not happen on the first day that it gets back up there, even if it does get back up there. I'm not saying that it will, I'm just saying that would be the opportunity to look for potential short entries. You can't short it down here because there's a good chance that you're going to see this thing retrace back up into last week's range. Now, that one time back in 2008 that I was discussing is over here. So let me pull this up real fast. Pardon me, bear with me. All right, so here is that one time. You can see that there was a 20% low that was put in right there on that candle. You did trade up into the 50% retracement of the bear market low. So at the point in time, this was the bear market low. You can see that for 4 weeks, you traded at and above and below that 50% retracement, also taking out the very low of the candle that closed above, so forming a bull trap. And you can see how it played out the next week. You had an obvious bearish engulfing candle that took out the low. Now you can see on the next week, when you did get that retracement or that pullback, it did trade above the previous bullish candle's low. But if I take a retracement of that bear market candle or that engulfing candle, if If you take a 50% retracement of that range itself, that shows you that bullish candle traded right up to the 50% retracement on that. So that's where you would have looked to take entries based on data that we had back in 08. This would have been the perfect short setup. So we can't really do that this time because we don't have that bearish engulfing. All we have currently is a rejection and a pullback. Since this is looked at as a bear market rally, people will be looking to short this thing. Can a pullback happen? Can we get down to here, find support, and then go on to make fresh highs? Well, higher than this high, it is possible. If inflation is topped out, we will get the next CPI data in September on the 13th. Okay, on the 13th, I think that is when we get the next CPI data. If that data is lower than the CPI data that we had for the month of August, which would have been July's data, in September we will get August's data. So if August's data is lower than July's data, then you could see this thing rally. And it could rally hard. So a lot of this is going to be based on what happens with inflation. A higher number would send this thing probably down to make fresh bear market lows. Since we don't have that bearish engulfing, you can watch one of two things. You can range the whole entire range, which is 2 weeks worth of candles. Look for this area here, 41.97. Watch the area that I said there. So there's a couple areas you can watch. If you just fib last week's range and look for a potential retracement into there, that's going to put you really, really close to the supply candle. It's going to be up to you where you decide to take a position. The smartest way to do this would to be wait for the highest one. Obviously, there's a good chance you could miss it if you just get a short retracement or like a retracement only up into like the 236 or whatever it is. Let's go ahead and put it over here, the 236. So if you get a very shallow retracement to there, you're probably going to miss the trade. But stay tuned. Stay on the Twitter. I will let you know what I'm doing on the live streams and as well on Twitter. We will be looking for a potential short on this next week. All right, next week. So what does that do for us on Bitcoin? Well, we are currently getting a small bounce at monthly support. Is it going to hold or is it not going to hold? Obviously, we have a lot of downside momentum and volatility expansion. So it depends on where volatility tops out. And volatility as an indicator is going to be different depending on which time frame you're looking at. Some higher time frames suggest that we're going to see more downside. If it does break down below monthly support, first bearish target for us is going to be right there, that wick low at $18,925. Next bearish target will obviously be the low that we put in on June the 18th. All right, but we do need a pullback in order to take in order to take short positions. So last week I was looking for prices to trade up to weekly supply. You can see that you did not get that. If I pull the fib level from last week's range, you're going to see that we traded up to the 236 retracement, very shallow retracement this week before finding that downside move. This entire weekly candles range expansion was yesterday. Okay, because if it would have went to the price that we were watching on the live stream, if it would have went there and triggered our short trade, we would have capitalized on the entire weekly range expansion because it all happened in one day, right? It all happened on this day right there, but it did not happen. So there's no point in crying over spilt milk. You're going to miss trades. That's just how this works. You can see a beautiful support level right there, puts you roughly around the midpoint of this last downside candle. So I'd say if you do get the bounce from monthly support, I wouldn't be looking for continuation any further than $20,800. That might be a good spot to look for downside continuation. A daily close above that will have us watching daily supply at $21,365. But more than likely from this point, we are going to be looking to scalp this thing to the downside. I did take a scalp trade on it this morning. We'll go over that real quick and then I'll wrap this video up, because I'm doing live streams all the time now during normal trading hours, so you guys know what I'm doing if you're watching those live streams. But anyways, since we got the bounce last night at the monthly support, once again, this line is not correct. It's more like this. I mean, it's pretty close to just being a perfect test of daily demand, which is also monthly support. So basically that, I didn't get to catch that So what I did this morning is I waited for a test of near-term intraday support, which is right here. And on this push lower, I got long, and then I had a take profit at resistance, which was right there. You can't really see how it transpired here on the hourly, but I got long there. I took profits here. It was a very small range scalp. That's all I expect to do on the weekends. I'm never looking for continuation, especially when you get a big move like that. So if you are going to trade it, you're going to be selling resistance. And obviously right now, had you sold resistance right there, so far you'd be in a very profitable near-term scalp. But here's where I got long, boom, boom. You can see how it traded right up into resistance. So this was my entry. That was my stop. It was a 2.5 to 1 risk to reward. The position was completely and entirely closed out. Once again, not looking for any continuation. We are going to scalp the ranges. I did not take a short there. One trade a day is good enough for me. If this video helped, make sure you guys translate that to me by smashing that like button. I appreciate it. Thank you guys so much for your time. Thank you for clicking on the thumbnail. Y'all have a fantastic day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.